All right. So is good credit still worth it in 2025? All right. So quick evolution of credit since 2020. It has been moving fast. All right. I will say that it has been moving fast. Things have changed. A lot of companies, a lot of different things are moving around. So evolution of credit since 2020. All right. That's only 5 years, man. So rise of fintech lenders. All right. They already existed, but it's a little bit different now because they're just a lot more widely known. They got a lot more marketing dollars. They got a lot more clients now. So they're kind of moving the industry around. So fintech lenders would be like Chime, Klarna, Affirm, right? These buy now, pay later, right? You know what the buy now, pay laters are? I don't know if you, I'm not sure, people are going to remember this, but what's it called? Kmart. Okay, I remember Kmart and Walmart and I think Target at once upon a time too. They used to do the Railway, the Railway service. That's kind of what a buy now pay later is, right? They just took that model from them, and then put it in the like kind of financial industry. So that's literally what it is. It's literally Railway. You're literally taking a large payment and they're able to break it up into smaller, more digestible payments for you, so you can get that trip you're trying to get or get that product that you're trying to get. Instead of paying the 3,000 up front or 1,500 up front, you're able to break it down into $150 payments over 10 months or something like that. So that's literally all it is. Okay. Alternative data. Okay. This has been really, really, really helpful. So alternative data would be like companies and lenders looking more into your banking activity, your rent payments, right? That's kind of new. Like you weren't able to get your rent reported. You had to have a mortgage to get your rent reported. Right now, you can get rent reporters, Rental Karma, Boom Pay. There's a whole bunch of other apps on there. You can even double, triple, and triple up on these apps too, right? So you can, if you have a thin credit profile with not that many years of age, you've been written your place for 2, 3, 4, 5 years. You can get that 5 years of age actually put on your credit report, and it's going to help you overall. Okay. So rent payments and subscription data. This one is the subscription data is very, very, very slept on. All right. Very, very slept on because you can get credit for paying your Netflix, okay, for paying your Hulu, right? This is, like I said, very slept on, and it's very new, and it's very, very accessible, right? So besides like Experian Boost, you can do it through there. But man, I have that app. You can get new accounts reported onto your credit report by your subscriptions. Okay. All right, and AI powered lending replacing traditional underwriters. This is I don't know if I'm fully for it or fully against it for a few reasons. All right. The traditional underwriters. I mean, this has been going on for a while now, right? Since the 90s. People don't know that, but they've had some type of form of AI for a long time. Like Siri is a form of AI, honestly. Like when you go apply for something at your bank, right? You fill out the application. There's a form of AI looking at the data points and pretty much saying yes or no. So they've been using this a lot. Now it's a lot better, of course. They have a lot more data points to work with. They take a lot of other things in consideration, but the traditional underwriters is really helpful, especially on the business side. Okay, especially on the business side, you want a traditional underwriter because let's say your business went down 20% from last month, right? Like they can see that. They'll ask you questions, hey, why this happened, why this happened. Oh, well, actually, that's due to what's it called? Like Thanksgiving, like the holiday season and all that, right? Holiday season, most businesses except the one that are selling products, right? Home-based businesses and mom and pop businesses and stuff like that, their revenue goes down, right? During Thanksgiving, Christmas, and all that because they're getting ready for that stuff. So with a traditional underwriter, you can explain that. Okay? With an AI powered lending, it's hard to explain that, but they kind of built that into the AI powered lending now. So on the business side, you want a traditional underwriter, in my personal experience. But everything else, yeah, everything else is pretty much the same. Like if you apply for anything online, it's basically the AI powered lending pretty much approving you or denying you. Okay.